Welcome back. We hit a new threshold. I don't know if everybody knows, but as you can see, U.S. national debt over 38 trillion. So with that, I thought I'd take a look at a couple items, like a couple of YieldMax items and actually a Roundhill item or two. So people that are worried about the debt, of course, YieldMax got the GDXY gold or YieldMax Gold Miners ETF that I thought I'd take a look at what it's holding, how its performance has been. Then, of course, you got MSTY and YBIT for those who would play the debt from the perspective of owning a crypto. And then also from the Roundhill perspective, we got YETH or YETH and YBTC. So I'll be adding some Roundhill components as time progresses. That'll be the next area I'm going to look into, see how those perform respectively and capture their performance metrics on a kind of an automated basis for anybody to reference at any time via my free to use website. But to jump in, I guess, right into the first one, always seems to get a little bit of interest, GDXY. This, of course, is based on the gold miners ETF. I believe it's GDX, the Van Eck Gold Miners ETF, which for those who have been following gold prices, it has been in quite a move lately, although it's definitely fallen back from its high. Let's see, October 16th. It's fallen back somewhat substantially. That said, it's been on quite a roll for the last year after being stagnant for a decent amount of time. But so GDXY, of course, is the YieldMax component that tracks it. And you can see, assuming a $2,000 starting investment, it's pretty stagnant there for a while. But then recently the gold has taken off, and so has GDX, the can't seem to say it, the Gold Miners ETF. And with it, the YieldMax funds actually started performing slightly better. That said, you can see since mid-October, there has been somewhat of a downturn or a regression to the mean, whichever one you need to use. But distributions per share, I'll add an average line, but it's actually performed, I think, pretty well from a payout perspective. It got over the dollar threshold there, but now it's into its weeklies. It's paid 11 cents and almost 15 cents respectively. We're talking about an item that, I guess if we take a look here, it's trading about $15.87 a share. So not too bad from a percentage basis. And then the price plus cumulative distribution chart, one I always like to reference, of course, came out at 20, currently trading about that 15 and change. Paid a $10.27 dividend since the inception date, which was July of 2024. And as far as what they're holding at the moment, the breakdown as of, I guess, Friday here, we got to their positioning. You can see GDX right now is relative to where the black line is. They got a synthetic structured at 75. So their synthetic is, let me zoom out here so we can capture everything without scrolling. Their synthetic's probably slightly negative. You can see they've already moved options from 1024 to 1031. They got them structured at 75 and 77. They got some bought at 79 and 81. You can see if you go to the previous iteration, here were the options they had sold for the 24th. They were at 82 and 83. So those, I imagine they bought them back for nearly nothing in order to free up their collateral to establish their new position. That said, you can see from their synthetic, they had not written all the calls they can. They still got capacity for about almost, or I'll just say their exact term, 8,945. For the ones that do got written, it does appear they're doing a credit spread. So if you add those together, 9,000 plus 8,000, you got 9,000, 8,000. So 100% of the ones they have sold, they also have ones bought at higher strike prices, as you can see. But with a gap, I guess, between kind of 77 and 79, so you got about a $2 share gap between the highest strike sold and the lowest strike bought. Fund makeup percentage per share, you can see the synthetic, like I said, slightly negative, about 18 cents negative drag on the fund. The other contracts they sold that look like they are on the books right now, they're expiring the 31st, or it looks like they're bringing about 10. Right now, they're a negative 12 cent drag on the fund. So if those expire worthless, well, of course, the fund will go up by 12 cents. Their cash position already has gone up 12 cents. You can clearly track that down here. So here we track everything. GDXY. So yeah, here's the components. And you can see the YieldMax ETF got up decently high. And yeah, you can see I was comparing it to here. 18 and 12. You can see that those showed 18 and 12. And you got the ETF price about 15 and change. I said it was all the way up to almost 18. You can see they paid out their last distribution there. And then since then, their cash position stayed somewhat stable. It actually went down a little bit, which I'm wondering if they moved their synthetic slightly and used some cash. I guess I'm not entirely following that, but take a look at that a little deeper next week. But that's basically how they're structured. The market cap of the fund, since the inception date, you can see it started about, 75 million. It's been moving up. It really moved up there with gold going up almost past the 200 million point, but since then it's fallen down back to just under 200 million. Shares outstanding, of course, have grown along the way, as I'm sure people either invest in the fund or employ a dividend reinvestment strategy on their distribution, thereby pumping money into the YieldMax fund and having the shares outstanding go up. I'm also curious why my history only goes back to the 18th. I thought I was tracking this one for longer than that, but perhaps not. I'll take a look at that and get back. But there's GDXY. I cover MSTY quite a bit. That's, of course, one of the largest held YeildMax funds. Take a look at it today, just about 3.27 billion. It has fallen from about 5.5 to 6 billion that it was at its peak, taken a rather large drawdown since then. But for those who own MSTY, it clearly hasn't been a very good performer. It's, of course, based on the underlying stock of MicroStrategy or strategy. You can see it basically hit its total return peak back in November of 2024. Since then, it's still assuming a $2,000 initial investment back in kind of March, April of 2024. You took $2,000 and basically turned it into $5,500, but it was almost up to $7,000. So since then, I mean, we had a pretty drastic drawdown going into like March, April timeframe. Really, since March and April, from a total return perspective, it's been about flat. So what that means is the ETF price has gone down, but the ETF price has basically gone down by as much as the cumulative dividends have gone up. So it's been a return of capital game, since they're not necessarily doing a return of capital just based on the total return perspective, if you want to look at it that way. It's been flat since the March, April timeframe of 2025. As far as what they're holding at the moment, so you can see, so here's MSTY today. Looks like they also moved all their positions to the 31st or next Friday. Here's actually what they were ending today. So they had everything sold at 300. And this MicroStrategy current 288. So all that basically expired worthless. They probably bought it back for a small premium to free up their collateral to resell. Basically, it looks like almost exactly what they had before in terms of strike prices. The contracts distribution looks a little different, but yeah, they're starting at 300 and going up to 315. Is that what they previously did? 300, it went up to 320. So they brought in the range a little bit, 300, 315. Most of them sold, of course, at 305 and 310. Then they have a few contracts bought at 322.50. Clearly doesn't look like as many bought as they have sold. So if you look at their synthetic usage perspective, they've sold basically 114,765 minus 41,765. So they still got 41,765 that they can sell, or that's their capacity. Although lately, MSTY's been keeping some capacity aside and just not selling any calls against it. They've been using it uncapped, basically uncapped upside on a particular portion of their synthetic. But for the stuff they do have sold, they have most of it uncapped, or most of it capped, I should say, without a upward call bought. So basically, once you're capped, there's no participating upside if there is a huge run in MicroStrategy or strategy. But 13,500 contracts they do got the credit spread approach. So they got, you can see that the shares or contracts, 13,500. They do get them bought. So if it really runs for 13,500 shares of the synthetic or contracts of the synthetic, they'll start participating upside again if it really runs going into next week. So interesting synthetic usage for MicroStrategy lately. I feel like their trading team is, I guess, looking for that huge upside. But then again, they leave a good portion of their positioning capped at a particular strike price. Yeah, I guess overall, on one area, they're leaving a portion of their ability to write calls. They don't touch it, so they leave that portion uncapped in case there's a huge move in MicroStrategy. But then on the other hand, they're not doing credit spreads 100% of what they do have sold. So it's almost like they're in a tug of war between thinking strategy or MicroStrategy is going to go on a huge move. And then from the other position, they got a portion of what they have sold basically capped with no credit spreads. So they basically 100% cap themselves at a certain rate if the underlying stock goes on a pretty large move higher. So yeah, anyway, it seems like a kind of two different thought processes and where the MicroStrategy will go based on the strategies they're employing. But yeah, I guess that's MicroStrategy, just looking at their history here. So they just sold some new contracts. So here's the distribution that they paid on the 15th. I guess their cash positioning, so it probably went down because I guess we probably did go ex-dividend date, which is pulling they sold some calls, which gave them some money. I guess that's probably what was confusing me on GDXY. You got the ex-dividend date hitting. If they moved all their calls today, they didn't really just let them expire worthless. They bought some of them back at a really low premium and sold some new ones. So you got the cash position going down slightly, going down by 13 cents. That probably includes some cash that's captured from selling contracts. And then their stock also went ex-dividend. So their cash position goes up by the new premium they capture, but then their cash goes down by going ex-dividend. So the dividend that they announced to you as a shareholder that you'd be getting. And as far as what that is, you can see distributions per share. I think it was around 20 cents, 21 cents on their new weekly. So we'll see how these trend since they've gone to the weekly filing rate. So that's MicroStrategy. Then just a couple other quick items that you may be interested. So they do got a YBIT. So I guess you look at MSTY or MicroStrategy or strategy being a levered play on Bitcoin, whereas YBIT's maybe just a play on Bitcoin. So we got YBIT here. just taking a look at its total return. It came out at 20. I guess it went down initially. It came down around middle of 2024. It went down initially. Since it came back a little bit, down a little bit recently. It went from 20, it's down to 885. It's paid a $12.64 cumulative distribution. Comparing it to its underlying, which is YBIT, iShares Bitcoin Trust. Clearly, the Bitcoin's been a better investment. But look at how it's structured right now. The previous position was that. Looks like we'll see, YBIT's at, I wonder what I got. Let's skip YBIT. There's pulling in some interesting, I'll cover that a little bit later. I just added that to screen there. It looks like it might be pulling in the wrong item, but I'll come back to that. But Roundhill, just another quick update. I did add the Roundhill. I'm starting to add some of the Roundhill. I got WPay, YBIT, YBTC, and YETH. Just performance metrics, nothing too in-depth. But you can see YBTC. In this case, I'm not comparing it to Bitcoin. I'm just comparing the reinvested to the non-reinvestment options. This assumes a 5,000 starting investment. And you can clearly see that if you include all the data, it starts at 5,000. And then I got YETH as well, which has not been as good of a performer as YBTC. Once again, assuming a $5,000 starting investment, you're basically even right now on it. So these, of course, based on Ethereum and Bitcoin, we can see these also pay weekly, or initially, I guess they paid monthly. Then they jumped to that weekly payment in the middle of 2025, July of 2025. And since then, I've been paying weekly. Let's see if we take out and just include a few of the weekly pays. We can see since that time frame, YETH has been paying about 36 cents. And then if we go to the YBTC, and if you want to take out some of the past history, you can just set your basically the last number of payouts, click false, basically just say true to the last 13. So over the last 13 payouts, you see YBTC has been around about 42 cents a week, trading at 39.32, whereas YETH is trading at 22.97. So YETH, of course, assuming 5,000 starting, I said you're about even, mainly because the ETF price has fallen by about half, whereas the cumulative dividends paid are slightly over half. So that kind of gives you the even. So the distribution has been good. Just the ETF performance has not been very good. Whereas if you look at YBTC, let's take out some of the previous noise. So this is the last 13. It's been a pretty good investment. Starting at 5,000, you're almost up to 8,000. A little bit of decline lately, but it's paid out a $39.51 cumulative dividend since inception. The ETF price has gone from about 50 down to 38. So some NAV erosion, but total return perspective, looking pretty good. So YBTC, something to look at. In addition to YETH, YBIT, MicroStrategy as well, GDXY, if you've been watching. The national debt, which we're over 38 trillion. I think when I started collecting this data, which wasn't too long ago, we're at 37.5 trillion. So we're just since that time frame, the national debt's up 500 billion. I don't know, something I watch, something to consider, but thanks for tuning in.